Good morning, team. Welcome to Swing Trading Live. This is the only place for swing traders to consistently profit and make money, learn about top stocks, and just get education on becoming a better swing trader. So anyway, guys, as always, I'm so excited to be here with you. I'm going to jump into the market. We're going to do a market breakdown, understand what the market is doing and where it's headed. Again, we're going to have, as you can see from the title of this video, the bleeding is continuing, guys. We've been having a very, very red last couple days, including Friday, where we had a huge crash. And then now that kind of continued on into Monday, and then we kind of had a flat day, and then now we're just really going down with it already gapping down pre-market so far today. So we're going to look at our levels and understand where we're headed from there. Then we're going to go into some educational topics that I think are very important. For instance, like how midterm elections will affect the market overall, as well as some understandings of what to do during range-bound markets. When we enter this range-bound phase, which we've kind of been in, how do we profit from that? And so again, we'll be going through those different type of concepts. So anyways, let me pull up the S&P 500 and let's get this party started. So anyways, this is SPY, which is the ETF that tracks the S&P 500. We can't really see pre-market activity on this because again, this is an ETF, which means its trading hours is between market open and market close. But what we can do is we can look at ES11, which is the S&P 500 futures. And again, futures trade 24/5. And so again, these have been trading overnight. And if we look at this, we can actually get a good understanding of what happened throughout the evening and throughout the night during the trading session around the world. And so again, we can look here that the market closed around this level, and now the market is down here. So what is this a sign of? Well, again, I don't know if you remember me talking about this. I didn't talk about it too much, but it's called the 10% continuation play. And so the 10% continuation play is quite simple. You look at the trading range for that day. And so, for instance, the trading range for yesterday was this. Let me remove these lines. They're not important right now. So this is the trading range for the day because this is the days of trading activity. Anyways, we look at this range and we look at where did the stock close? The stock closed in the bottom 10% of this range. If a stock closes in the bottom 10% of a range and then starts breaking below those levels during pre-market, then the next thing we look at is we look at the support level being formed in pre-market. Once this support level drops, when the market opens, then we're expecting to have a red day as well. And so again, expecting another red day in the market based on a 10% continuation play and the fact that the trend is down and trend always continues. The trend is not something you want to fight. So again, if the trend is down, why fight it? So anyways, we have multiple factors to understand that we're looking for the market to dip. Now, the next question is, okay, if we're going to have a red day today, or that's our thoughts, where can we expect the market to eventually go? Well, where is our nearest support, our nearest strongest support? Our nearest strongest support can either be here because of this dip. So again, this would be a minor one. But what I'm really looking at for a major support coming in is right here as our major support. It's around the 3640 level. So again, this is where our major support is going to come into play, and this is where we're going to have some major support come into the S&P 500. And so again, this is still a pretty far drop in the market. You can see here from about where it is now, that's about a 7% drop in the market, which for the overall market is quite large. And so again, if we get there, that's going to be a rude awakening. Now again, something that I am naively hoping for, and I say naively just because it can happen, but it's not 100% probable, but I'm hoping, is that we're coming down from this uptrend, we're moving down, and we're trying to reverse here, and we're trying to head higher. And the reason why I say reverse here is because let me remove drawings real quick, and we do, is because of this. So again, for two factors. One, which I will discuss more later. One is the effects of midterm elections on the overall market. Again, the midterm elections can have a positive effect on the market, which I'll explain here in a second. But what we're looking at is that when midterm elections end, we tend to see the most positive performance in the market for that next coming 12 months. And so what I'm thinking is we're going to form this little bottom here in the market, and then from there, we'll kind of start to push higher. So that's what I'm expecting with the overall markets. We'll see what that does. But then also from a technical basis, what I'm looking at is this. We're coming down, we're finding support here, and then building a base so that for midterm elections, then we take off after that. And so again, I'm thinking here we have this shoulder, this head, this shoulder, hopefully this, and then we start pushing higher. So from a technical basis, this is a pattern that we could see forming. This is a pattern that I'm hoping will form. Again, not 100% there yet, and we have not confirmed that yet. It looks like we're just going to be continuing to trend down. So we'll see where that goes. But technically, this shoulder can reach the low of here, so it can go all the way down here before it hits up. So, anyways, that's kind of the idea that I have for the market based on technicals and based on statistics. And I say statistics because statistically speaking, that's how the market performs. Anyways, that's really all we have for the market overall until we have market open. And so before that time, something I did kind of want to recap and go through is the midterm election cycle. So let's take a second and look at that. So anyways, if we look at midterm elections, again, this is what I want to look at first. So again, this is wealthmanagementusbank.com. Again, a large bank that takes a lot of effect, with a lot of analysts, blah, 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 blah. What we're looking at here is some different things. And what I want to look at is the stock market performance is going to be the most important factor here. So what we're looking at is stock market performance during midterm elections here can be separated into two categories: pre-midterm election and post-midterm election. Pre-midterm election is where you're going to have the most volatility, the most indecision, and the worst performing market overall. Post-midterm election is where you're going to have hopefully less volatility, but more importantly, you're going to have the greatest performance in the market overall. And now we know this because statistically looking at, we can see this right here, the S&P 500 index has historically underperformed in the year leading to the midterm election. So the 12 months prior to midterm elections, we've seen the market underperform. What is underperforming? Well, the average market performance is an 8.1%. But again, the 12 months prior to midterm elections, looking at the history of the market, we've seen a 0.3%. That is nothing. That is either like it's been very negative. Again, if you're looking at the history, we're looking at literally over 50 instances of midterm elections throughout the S&P 500 market cycle, and we see a 0.3% return. That means that we've had positive and we've had very negative 12 months prior to midterm elections. And so what does that mean for us having this negative type of environment right now? It means that we're totally normal and it's totally healthy and it's totally okay. This is statistically what we should be expecting. Next, what happens during post-market after the midterm elections? And so post-midterm elections period is a very different story, which we're quite excited for and hoping for. This is where the performance is going to come in. The S&P 500 has historically outperformed the market in the 12-month period after a midterm election with an average return of a 16.3%. Do you remember what the average return is for the S&P 500? 8.1. So again, if we double that, that's 16.2. So we actually more than double the average market return in the 12 months after a midterm election. And so again, this is especially true for the 1 to 3 month period following the midterm elections. So where do most of our returns come from? 1 to 3 months after a midterm election cycle has finished. And so again, that is very great news for us. Why? Because midterm's coming up here in November. And so again, one more month till elections. Then we have the next few months to make a lot of money. We see that stock market performing. And so we have the ability to set ourselves up here. And so again, we're going to be looking for identifying stocks, getting ready, midterm elections to end, and then looking for that big return cycle. So if we want to look at the historical performance of this, we can see here since 1962. Again, we can look at who the president is, the party, the House and Republican seats that got flipped. And again, we can see the performance. You can see here 1962 with John F. Kennedy. Before the midterm, we had a negative 17.6% return. Then after the midterm elections, we had a 17.1% return. That is huge, right? That's insane. And so that's for the first 3 months. For the next 6 months, we had 23.5%. Next 12 months, we had a 30%. You can see here 30, 29, 23, 24, 18, 12. All these returns are quite huge. Again, that's quite insane. We can also see the average seat change and whatnot. So that's kind of what we're looking at here. You can see that we had just for the 12 months prior is just crazy. Anyways, that's really the highlight and the statistical knowledge you know. You can read more about the specifics behind this. I can just quickly explain the reason behind this and why this phenomenon typically occurs is because the market doesn't really care essentially who is in power, who the president is, who controls the seats in Congress and the Senate. They don't necessarily care about that. What they care about is certainty and knowing what's going to happen. And when we have these elections, it's up in the air, right? Who's changing seats? Who's going to take control of what? And when that happens, that causes uncertainty. That uncertainty in the market allows for the extra volatility, allows for the underperformance because they don't know exactly what's going to happen. When midterm elections happen, regardless of which party takes the Congress, takes the Senate, and has the majority control, what really matters is they're knowing, okay, this person has control. These are the policies we can expect. This is what's going to happen, blah, 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 blah. They know what to expect. And when they know what to expect, the market then can reject and project based on that. And that's what causes the positive performance after the midterm election cycle. So that's kind of what happens. You can see here, Republicans win the House or Senate. Again, this is kind of what you're looking at. If Republicans win both House and Senate, again, strong headwind for White House agenda, again, given there's a Republican in office, and other things like that. So for the White House agenda, yeah, because they're going to block whatever that happens. Again, you can read more about the analysis, see additional details there. And I also really liked this type of analysis where you can see each year by year real GDP compared to the performance overall, especially compared to the government changes. And so again, this is just another chart you can look at if you want to explore on JP Morgan Asset Management website. Anyways, that is the little segment I wanted to do on midterm elections, just because that is coming up and I feel like it's very important. Why? Because everything I do is 100% based on statistics. And so again, if we can have a profitable trade and understand the market from a statistical standpoint, it'll give us some clarity and some understanding on what is going on in the market. So that's something I like to go through. Let's look at the calendar. We did not do that yet today. So this is the economic calendar for the day. This will give us what news we're expecting from the market and what kind of is coming our way. So Thursday is a very slow day in terms of news. The only major thing we have so far is the ISM manufacturing PMI, scheduled to come out at 10 a.m. That's EST. So for my time, it's coming out at 9 a.m. So roughly 30 minutes after market open. We should expect the ISM manufacturing PMI. Not super important, but again, it is red, so it's kind of, but I mean, like, as in market-wise, it's not going to play a huge effect. But what we do have tomorrow, but the good news is it's all going to be before market open, is we have the average hourly earnings, the non-farm employment change, and the unemployment rate. Why is this important? We have three major reports coming out tomorrow before market open. And tomorrow is the last trading day for our extended weekend trading. And what I mean by that is Monday, the market is closed for Labor Day. So since it's closed, everybody's going to try to get their trades in Friday, which is going to lead to extra volatility, extra movement, including with the news of these three important reports coming out today as well, or coming out tomorrow as well. So that's something we're going to have to watch out for, that extra volatility and movement. Again, it may precipitate the crash in the overall market, may not. Only time will tell on that. We'll have to keep our eye on that. But again, overall, the S&P 500 is trying to trend down because the trend is down. The lows are getting lower. The highs are getting lower. And so, again, that's what we have for the overall market. Now, again, we have about 15 minutes until market opens. So until then, I actually wanted to teach you more about range-bound trading. So let me pull up that training slides and we'll kind of get into that. So let me.
All right, in this video, we're going over range-bound stocks with the trending band. So again, the trending band and the title of it has trending stocks, but the stock does not have to be trending to make a very good trade. So I'm going to show you exactly how to trade range-bound stocks and what a range-bound stock is with the trending band indicator. So as you can see here, the difference between range-bound and trending is very simple. All you have to do is look at the chart. So when you look at the chart and you see the stock consistently going up, staying above the green line more than not, then it's going to be an uptrending stock or a trending stock, right? Because it's trending up. Now, a range-bound stock is going to be a stock, typically a dividend stock, because when they pay dividends, it makes the stock a bit range bound, but you can see that it'll actually bounce in between the top yellow line and the bottom yellow line. So you'll see up down movement more than straight up movement, right? So you see how this is straight up. Well, it would typically be consistently straight up for a trending stock, but an up-down movement is going to be your range-bound stock. So let me show you exactly, let me give you a bigger picture on how to trade range-bound stocks with the trending band indicator. So first, let me say, range-bound stocks are typically going to be high dividend-paying stocks or dividend-paying stocks. And why? Is because a dividend comes out of the stock price. So when you get paid a dividend, it's because that money is coming from the stock, which causes the stock price to go down. And because of that, the stock price goes up and down more. Now, with a company that does not have a dividend, the trending stock the stock is typically trending because the stock gets to make and keep more of its money, which makes the stock price go up because the company is worth more. But now getting into it here, the how you trade range bound stocks with the trending band indicator is you trade from top to bottom, right? So it's a support and resistance play. You buy near support and you sell at resistance. So your top yellow line is your resistance and your bottom yellow line is support. So for instance, it hits support here, you buy. When it gets above whichever level you are comfortable with, for instance, if it's this middle line or if it's the green line or if it's the top yellow line, then you'll sell, right? If it hits the bottom one, then you'll sell at the top. If it hits the bottom one, you'll sell at the top. Now, how I would break this down is this, right? When it hits the bottom yellow line, I would buy, or I should say, when it breaks down below the yellow line and then comes back through, which is that dip buy signal that we have for trending stocks, it works the same on range bound stocks. So you'll buy here, and then you'll set your stop loss towards the low, so it's going to be a very safe entry. And then once you get above the first red line, you'll set your stop loss there. When you get above the gray line, you'll set your stop loss there. When you get above the green line, you'll set your stop loss there. And the reason being is so that you can slowly move your stop loss up, which allows for you to take profit on the stock, but also allows you to leave room for the stock to go higher. But I wanted to show this great example is because of those who say, Austin, but this stock doesn't trend well, but I still want to trade it. Well, you still can. If it respects the bottom yellow line and the top yellow line, it can be an amazing stock because not only do you have your super safe areas where you know to buy and where you know to sell, but it also more times than not will offer a dividend. So you can make money with the stock going up in price, and while you are doing that, you can also make money through dividends. So again, I hope this made sense, and it kind of explains how to use range bound stocks with the trending band indicator. Once again, if you have any questions, do not hesitate to reach out on the Discord group chat. Thanks for watching, and continue on in the course.
So anyways, that's Rangebound trading. I realized that we had a question come in from Ann2020. So again, we'll take a look at that in the comments. Again, if you are live with us, thank you so much. If you want to put a stock in the comments, feel free. We have another 12 minutes about until market open, so we can break down some stocks if you'd like. So Ann2020 says, can you please check out XBI? So looking at XBI for the next 2-week time frame things. Okay, so first thing we do when we analyze a stock is to understand the overall direction. So what we do for that is we go to the daily chart and we zoom out and we look at what is going on with this stock. And so we look at this stock, what we can see is this stock is range bound. What I mean range bound is if we look at it from where it started to where it is now, it's gone nowhere. So that is not a good sign for a stock that we want to trade. The reason being is because we want to put our money into assets, into stocks that are going to increase in value and make us money. And so again, this stock has not done that. It's a biotech ETF. Whatever, I was just pointing that out. Anyways, so what we're looking at is a range bound stock. If it's roughly where it started in this period, again, it's a period of over 3 years now, it's in the same thing. So that's really not too productive. So what we can see here is we have a low around 68, actually can be a bit lower, 68. We have a high of around 169. So again, those are highs. And then again, we have many levels in between. But these are our main levels for range-bound trading. So what we can see here is a double bottom has formed. And so again, we have a double bottom. We potentially have, so again, double bottom is one option. Option number 2 is this, head and shoulders. So what we are seeing is a potential for a reversal at this level. And so again, long term, what you can expect from this is hopefully see a move to the upside. Again, long term, when I'm talking long term, last time it hit this, it took 345 days. So last time it went between the range was 345 days, which is quite a long time. So it's almost a whole year. With a return of about 134%. So again, if you want 134% return of the year, it may not be bad. But what you're looking at is you could enter the trade if this head and shoulders pattern starts to form, aka the market starts to reverse here. Again, you could see the potential for 81, 82% return. But again, you would have to stand for a risk of about a 17% return. So, or a 17% risk or stop loss. So, that's the option on XBI over the next 2 weeks, though. So that's kind of long term. What we're thinking is we're in a downtrend, but we are looking like we're consolidating for a reversal. So long term picture you have to keep in your head as you zoom into a closer time frame analysis. So what we're looking in here is that the downtrend is really holding it, and yeah, there's not much we can say. Again, we have a support level here, but again, pre-market already seems to be below that level. So again, our next support is here. It looks like it's really taking after the overall market. So again, if the overall market can drop down like that, then maybe it will continue to drop here on XBI. But if the market can pick up, then biotech will have a good push up higher. Now again, what would not surprise me is if the Democrat Party continues or takes full control of the House and Congress and Senate, and well, Congress, House, and Senate. Then again, I would see that biotech would probably do a lot better, given that the 3 to 6 month performance after the overall market, like we discussed this morning, is typically a lot better. That may push up the market, and then biotech I expect to do better, just because Democrats overall tend to be more health conscious, and so pushing more. Those type of vaccines and stuff will increase biotech awareness and stuff like that. So that is one option. Miriam Gabriel, I hope I pronounced your name right, says, can you look at Tesla? Yeah, so Tesla. As always, when looking at a stock, what we do is we zoom out to the daily chart to get an understanding of where we at long term. Tesla, I love Tesla. It was so funny because I'm going to take it back. Tesla back here, I traded Tesla in this range. 2017, 2018, 2019 is when I traded Tesla. And so it's crazy to imagine it at the current price. I mean, we did have a stock split recently, so the price is lowered, but this was around like a 300, 400 price point, I think, when I was trading it in this range. And so it's crazy to see how high it is now. But anyways, you did not care to ask about that. What we're looking at now is the overall market. What the overall market is doing is it's a very choppy uptrend. And what I mean by that is, look, if we look over this period here of about 3 years, we see that it's way higher than when we started. But if we look at it, the progress from going from here to here is very choppy. It's gone up and down, up and down, up and down. Especially more recently, we can see that the period is very red, green candles. And so again, when we're trading a stock, we want to see a clear direction, like when it has a green candle that follows by multiple green candles. Not always possible, but still. What we can see from Tesla on the daily chart is that it does follow stock patterns very well. Look at this, a triangle breakout, large breakout. You can technically classify this as a breakout as well. So again, you can see here that it does respect breakouts well. And since it respects breakouts well, we know that we can look at those in the future. Anyways, what is our idea right now? Our idea is that the stock is uptrending but very range bound. So again, that is going to be our idea for Tesla in the overall market right now. So let's zoom into a 1 minute since we have that kind of basis for the market. And yes, the 1 minute chart kind of solidifies this idea of a range bound market. You can see here how it's very range bound. But what we are seeing here is that we do have a prior downtrend, as in like the market is moving lower. And then what we see here is we have a support level that, guess what? Tesla is now below. And so that's a very weak sign in the market. I mean, the market overall is weak and looking to have a red day today. But also Tesla seems to be doing that same thing. So again, my weak outlook on Tesla, given the market continues down, would be to would be a red day or a red rest of the week on Tesla if it continues to hold below this level. Why? Because there's strong support and we're breaking below it, and that's not a good sign. So overall, a lot of weakness on Tesla at the moment, with some long-term potential to increase in value. Anyways, that's about it. It looks like the only other one, yeah, I mean, I should have popped up there, but that's what Miriam Gabriel said, and we just commented on Tesla. And then AN20, we wanted to look at KBI, which we looked at too. So, anyways, if you're alive and you have any stocks you want covered, feel free. We have about 5 minutes until market open, which is where we'll be diagnosing stocks more and looking into that. So, doing that soon. Yeah. Go to the S&P 500. Get a look at what it's doing on the minute chart here. Remember that our major support is right here, and we have broken below it. So anyways, yeah, so the overall market for those who are joining is, it looks like it's going to have a very red day. Why? Because if we look at the trading range from yesterday, we can see the trading range from yesterday is about a high of here and a low of here, and we close towards the low. And then over or after market hours, we have gone, this is all after market hours for the S&P 500. We have broken the support level, and we've been holding below it. And so again, what we're looking for a market open is for some shorts. So again, shorts being below this support line of pre-market. So again, when the market breaks below this pre-market support line, then again, you could potentially look at buying puts for that. But yeah, so that's really all that's going on here for that stuff. Looks like things are popping up. But yeah, so I just wanted to quickly say, again, if you're watching and you have questions, feel free to put it in the chat. I would love to break down your stock. If you want to get my personal watch list of stocks that I trade almost on a monthly basis or every single week, that have helped me consistently outperform the market, my free watch list of stocks is in the first link below. Or if you have trouble finding stocks, I have all my screener filters to find day trading stocks, to find swing trading stocks, to find trending stocks, to find the best investing stocks. All those filters are actually linked below as well, and you can get those for free. So check that out in the description. But outside of that, we're just waiting for market open. Nothing too much going on. I'm really expecting a red day. Let's see. If SPY breaks that level, what would be the take profit level you'd want on a on a options contract? I'm trying to figure out. Let's see. An options contract, if we break these lows, oops. Can't even see that low because it's not even adjusted. Anyways, pre-market low is about here, which makes support about 391.80. You can go to about 390, 385. Let's see. The next expiration date is this Friday. Calls. Let's look for puts. It's gonna be around here. 395, 394, 390, 390. 86,000 volume. Is that volume? I assume so. See, what are these columns? I don't even know what these columns are. Volume, open interest, implied volatility. Volume, open interest. Yeah, this 390 level looks quite huge in puts. So again, I don't know if you guys know this, but the reason why I'm looking at the options contracts for a potential level that I see in the S&P 500 is quite frankly because of something called options pinning. If you don't know what options pinning is, it's where You can manipulate a stock price, especially on an expiration date, mainly major expiration dates. And what I mean by that, major expiration dates being monthly expirations, quarterly expirations, but also you can do this on the week ending expiration. What happens is you look at the options contracts to see which one has the most open interest in volume, and the stock will naturally gravitate towards that. And that is, again, a comprehensive view. You should look at the volume for a specific number of period over numerous expiration dates. And that's actually done through going to a website. Again, you can look up option spinning to learn more. But the website is Max Payne website. And so again, let's see where it is. I haven't been to this website in a bit, but maximum pain right here. So again, we can see here SPX maturity 916. This is the next major one. You can see where it's gravitating towards. You can see right now it's gravitating. The middle is where it's gravitating towards. It's gravitating towards the 3,965 level. So again, for a 916 expiration date, the stock will gravitate towards this level. And so again, you can also see that for individual stocks. So if we want to zoom in, let's see if we can do SPY with being a free member. And then, yeah, you can see today's. So today's, you can look at how it's gravitating towards 401, 404. That's actually way more positive than I expected. I was expecting, 390, 398 in this level. But no, yeah, it looks like the stock wants to gravitate towards the 401 level. So again, that means by Friday, it's expecting the stock based on the options spinning to be around 401. Now, again, this is not something, of course, you should use 100% accuracy. Like you're like, oh, wow, this is my new trading strategy. No, this just helps give you an idea based on the major markets. And why do I mean major markets? Because big players use options. I'm talking oil companies, hedge funds, they all use options to hedge positions. And when they do, they take massive position sizes. And these massive position sizes affect the market because they want to move it to their ideal prices for different reasons. And so, again, that is one reason there. Another one, you can see here that the calls are all here. So, again, if they're mainly selling calls, then again, they want it to stay below their price, so staying around 304, etc. So again, that's kind of what you're looking at. From that level, you can also judge open interest based on levels. You can see here 398, 401 is having the most open interest for calls and puts. It correlates, but you can see here puts at a variety of different levels and calls at a variety of different levels here as well. So again, that's kind of what you're looking at for Maximum Pain. So MaximumPain.com options / whatever stock you want to check out. This can be very useful for understanding where a stock should be pinned or where a stock should be going. And it's just a useful tip and another thing that you can add to your quiver of trading ideas and trading strategies is understanding open interest. Anyways, enough about that. The market is officially open. So again, the S&P 500 has gapped down. But again, we were expecting that. So again, we've had the gap down. We've been open in the market for about 3-4 minutes now. So you can see here that the market is trending down. Let's take a look on the ES1 futures or the S&P 500 futures where the support line is. So you can see here if the stock is currently trading at this level and the support is down 0.25%, then it's going to be the same on SPY. So the stock is currently trading at, I'm going to have to adjust this, and it's currently trading 0.25. So pre-market support is roughly here, and pre-market support again being based on the futures. That's kind of what we're seeing there. So again, the support is here. If we break this support line, obviously it's going to be a very red day for the market. But again, we could come here and fill. Also, we potentially have a gap, but again, as always, we can't really predict gaps too well on ETFs. The reason being because the futures fill to that gap, or it wasn't really a gap in the futures. Thus, it's not a real gap. It's just a gap on our understanding of the price action, not an actual gap like in other stocks. Let me get rid of this. Yes. So based on the option spinning, we could have another idea that we have a red to what do you call it? Neutral day or range bound day. And then we pick up on Friday hoping for a positive close. But again, that's just one idea. The market is looking very bearish at the moment, being below prior support levels. So again, not having things and also coming down very red onto this support line. So not the best signs overall for the market. Again, if you're live, thank you so much for watching. We covered a lot of stocks. If you want me to break down your own stocks, feel free to put it in the comment section. Yeah, you can see support trying to form here. Yeah, not the strongest. We have 10 seconds until the stock closes. If it can't regain, that's not going to be the best sign. 5 seconds. So just trying to regain. Yeah. Anyways, let's see. What else is there? Not really much. We're just watching the market kind of reverse here. No clear top stocks for today, no clear direction in the market. So as a swing trader, it's very hard to profit, and that's why I'm not recommending anything today or have been this week, because we have no clear direction, specifically in the upward direction. And if we don't have that, then we can't profit. And the best way to not lose money is to not trade sometimes. So learning when it is ideal to stay out of the market is crucial. And so again, that's something I'm focusing on right now this week, is just staying out, because there's nothing we can do that's actually going to benefit us. So again, if we stay out, we can actually profit. Anyways, our game plan for today is if we hold within this range, we're going to be very neutral. What I mean by that is between the low of yesterday and the pre-market support, this is going to be our range bound level. If we break above, this is going to be our bullish level. If we break below, this is our bearish level. Bullish, if you want, you could buy if you would like. Bearish, you can sell if you like. Neutral, you're going to be using range bound strategies like MACD divergence and RSI divergence, which are going to be your best range bound strategies, especially for an ETF like SPY. It's going to work tremendously well. But those are kind of the levels that we're watching at the moment. So nothing too much going on there. If you have any questions, feel free to put them in chat. I'd love to answer. I want to quickly show you like what you can expect in a trending market, like a kind of breakdown and strategy of that. Now, again, for those who are tuning in, thank you so much. This is the S&P 500. I'll break down the strategy again for that after this segment. But also, if you have any stocks you want me to break down, feel free to put them in the comments below or in the chat box. Anyways, let me show you this, and then we'll get back to what the market. Go through a case study of one of my recent trades that I did on Apple. This was an Apple swing trade using the TDBS system. So again, looking at Apple, we can see here that again, it fits our trending criteria. The stock trends well. And again, I was looking at it. It was around this period, and we were looking for what is this? This fits our dip buy criteria. Why? Because we're trending up. We're in a minor downtrend, and now we're looking for our doji candle entry. So again, the lines that I had on this chart charted out was I knew that I had a resistance at this level. I knew that I had a trend line coming in. If I connect these lows right here, actually I connected these lows, the most recent lows. Let me draw this out. Okay. Boom. All right. So I knew I had this trend line pointing to the upside. I knew that I had this resistance level. And so I was looking in to get into this stock. So again, I was looking for my doji candle near a support level. Again, I knew this trend line would act as support. I saw no doji candles here. There was one here, but there was no strong green candle the next day. Again, a doji candle, but no strong green candle the next day. There was a doji candle right here, a strong green candle, and then I bought in right here. So this is where I bought into my Apple trade right here.
right there. And then my stop loss was set roughly right here. So again, I had a small risk to reward, a small risk for a potential upside of reward. I knew that I could at least make it up to this previous resistance level. If not, we would break and continue higher. So again, that is all, hindsight is 2020, because what actually happened is, again, I started trading this up, slowly moving my stop loss up. I saw the break up and I saw a huge, strong green day. Now again, what we were looking at, let me get back to drawings. Let me remove this line here just to make more sense. But what we're looking at is a very strong green day, a very strong green day, a very strong green day, and then I saw a very strong green day, right? It went all the way up to 165. And so at this level right here, I knew that this could not hold. I was already up about 15%, so I sold right here at around 164. 57, something like that. I sold around this level right here. So again, I ended up selling right here at this point, which was very good in my opinion. At least I thought it was. I mean, it was, like, in hindsight, this was a great trade. But again, you get to see that it ended up going way higher than I could have expected. So again, I did miss out on profits, but again, I locked in a beautiful trade, and it's not something that, I can complain about or should complain about. You can see here, I bought in here, made about a 14% return over this period. I was also using an advanced strategy called covered call approach. If you have at least 100 shares of a stock, which I had about 300 shares of this stock, you are able to sell covered calls, and so again, you can make some extra income. So I made about $200 in extra income from just covered call trading on this as well while holding the stock. So again, it was a very good trade, a 14% over about a month. Now again, the market makes about an 8% return a year. So I can make 14% in about a month or two. That's amazing. And so this was a very successful trade. This is an amazing trade that, I would take over and over and over again. This is a trade that you want to look for. Again, if this is a stock you like, Apple, and it's in your price range, I highly recommend you trade this stock over and over and over. Again, this is an amazing stock. It's one that I stick with. If you never heard my spiel on stocks, is I think you should find 1 to 3 stocks that you love, that you traded well in the past, and just stick to those over and over and over. So my stocks is SPY, QQQ, and Apple. These are my 3 stocks that I go to over and over and over because they work well. I'm not saying other stocks don't work well. I'm just saying these work best for me, and I know them. So anyways, guys, this is a small, simple case study of how I traded Apple and the insights into it and how you can do it too. All right, guys, thank you so much for watching. I will see you in the next lesson.
All right, I hope you found that useful. Just some helpful advice to what to look for in stocks and whatnot. You can see here the overall market now has been trying to find this dip. We're having a hard time breaking above the opening price of the day. Again, it's also a weak sign. We can't just break above this level, which means which means we're having a hard time making a high. You could also consider this a double top, but quite unlikely. Again, so what we're seeing here is if we can't break this level, then we are probably going to stay in option number 2, option number 3. Again, if you're wondering what the 3 options are for the day, there's always 3 options. Always 3 options. 1, we're going to trend up. 2, we're going to be range bound. 3, we're going to go down. And so again, what we're looking at is if we break above yesterday's low, we can consider this a bullish market and we'll probably head higher. If we break below the pre-market support, we're looking for a bearish day. If we stay within these lines, we're going to be looking for a range-bound day. So that's kind of what's going on from that perspective. If you're tuning in live, thank you so much. Feel free to put any questions you have about any stocks in the chat box. I'd love to get to them. But other than that, that's about all we have going for today so far. Let's take a look at the QQQs. Be the NASDAQ index. You can see NASDAQ is breaking above its current market open highs, which is good. So again, what we're probably going to see here is just a guess. We come down, we break above, we find support, we break higher, retest this gap, and then we're going to do something here at this level with this gap. Either head lower if the overall market is lower, potentially head higher if we're in a bullish or range-bound market, in the overall market being the S&P 500. But if not, this is probably what you're going to see on QQQ for the rest of the day, is coming here, a lot of indecision at this level, and then move higher. The reason being I'm saying that is because, 1, just a lot of experience with watching QQQ. Second, also, is that we're 1 minute from the first 15 minutes of the trading day, and there's an idea called the opening range breakout, which I went into detail yesterday in the live stream, but also clipped it and put it on the YouTube channel. So again, if you want to watch that, feel free to go watch that. But if we close towards a portion of the range that we opened in, that kind of predicts how the rest of the day is. So again, we're towards the upper portion of that range. We're now less likely, because we're now further away from it. we have 30 seconds until the first 15-minute candle closes. And so again, we do have some activity, and again, we're heading down. So not a good sign since we're closing in the middle of this range, meaning that QQQ is expecting to have a very range bound, very neutral day. But again, we do have 15 seconds, and a lot can happen in 15 seconds for price action wise. Does not look like it's going to go in our favor though. So based on an opening range breakout strategy, because it's basically over now, we have 5 seconds. Based on an opening range breakout strategy, what we're seeing is that the overall range for the first 15 minutes is here. It's closing around here. So we're going to have a very neutral to bullish day because we're halfway in the middle, but also a little up. So very neutral range bound day for the QQQs. Now that SPY closed in the first 15 minutes, we can now look at what's going on. You can see here, this is the opening range of the day. We're closed here, meaning that the market is probably going to have a very range bound day as well, just because it can't pick a clear direction on our opening range breakout. So that's ideally what we're seeing here. So that's nothing too much, just a very range bound day. Again, range bound day, look at MACD divergence and RSI divergence and support and resistance plays. But again, as always, the best trade is sometimes not to trade, which I feel like we're in that current market. So again, we'll be kind of holding off. And again, I'll be offering trade recommendations as I see them perform well. But in the moment, we're probably going to wait and hold off trades until November for midterm election cycle, which we covered this morning. But that's about it on the overall market. I see no new chats. So that's about it. We've been live for about 45 minutes, and I would say we covered a lot of great topics, broke down a lot of market expectations. So anyways, guys, I hope you enjoyed this video. Thank you so much for watching. I will see you live tomorrow at 8 a.m. Central Standard Time to break down the market, break down any stocks you want to recommend, like AN 2020 and Miriam did this morning. So again, thank you so much. I'll also be clipping up the most important clips from this live stream and putting it on the channel. So make sure to smash subscribe and turn on the alert bell because you don't want to miss out. We do some amazing teaching and training on this live stream. So I hope you can catch it tomorrow. Anyways, guys, see you tomorrow. All the people who are live.